Guys, Akil here, and welcome back to another episode of the Forex Market Preview. If this is your first time joining me, thank you for watching. Hopefully you like what you see. And if you do me a favor, sign up using the link below or the link in the description box. That way you get this video sent to your email each and every week. And for weeks where I recorded early, like this week, it is Friday afternoon instead of Sunday, well, you'll just have access to one of the best weekly trading videos on YouTube before everyone else. Now, in today's video, we're going to take a look at a few pairs. We're going to take a look at the euro pound, and we're going to take a look at the pound dollar. Again, it is Friday. Typically, these videos come out during the weekend after I have really a full time to do some analysis while the markets aren't moving. But if all goes according to plan this weekend, I'll be joining Jason Greystone, who flew across the pond from London, up on Wall Street on Sunday. So I want to get this thing out to you early. But let's take a look at the pound dollar. And the pound has really been, in general, has really been an interesting pair this as of late. It's been on sort of a roller coaster ride. A few weeks ago, we saw massive strength in the pound as the Bank of England started talking about interest rate hikes in November. And then this week, we saw a massive sell-off. If I'm not mistaken, this was probably the worst week for the pound of the year. And it's a few things. There are some negative economic data points coming out, but there was also some very negative political news as well, with what seems like Theresa May losing control over leadership or whatnot, and we saw a massive retracement. And with that being said, it's not a bad thing. Action or movement provides opportunity, and I want to give you really some insight on what I'm looking for coming up for the week ahead. Now, we're going to start here in the 4 hour. We'll hop out to the daily a little bit. I want to give you guys kind of a bigger term perspective. That way you have time to really watch this video and set yourself up for the trading opportunity that's to come. Let's just get rid of these Bollinger Bands here. And earlier in the week, I was looking for a long opportunity on the cable, on the pound dollar. Had a very, very nice trade a few weeks ago. Caught this bullish move upwards. We saw a little bit of relief from that. I thought we'd get a chance for a trend continuation type move. And I had drew out two kill zones. My first kill zone was a larger kill zone from this swing high to this swing low. And by kill zone, I mean like a potential reversal zone, a zone in which I was predicting price action to slow down and maybe reverse. And then the secondary kill zone was going to be right in here. And this was the one that I was personally targeting. And well, as you can see, price action just blew right through those levels. And a lot of traders will look at this and they'll say, oh man, that's horrible, killed. Price blew right through and you lost all this money. And that's not really the case. Again, we want to be predictive in our analysis, yet we want to be reactive in our execution. And there are certain strategies, there are traders out there that find it more beneficial to use very aggressive entries, meaning putting a limit order at a specific price point and saying, hey, I don't need any proof or confirmation. Once price hits this level, I want to buy. Me, I'm not that type of trader. Aside from a single strategy that I trade, I need to have confirmation. So when I identify these zones, I'm not just buying them up at this level. I'm waiting for price to get to that level. I'm watching how price reacts. And if I don't get any type of reaction from price that says, hey, we're more likely to reverse than not, then I never enter the trade. So although it stinks that I won't get a opportunity to involve myself in the market, I didn't lose any money trying to get in prematurely or too aggressively. So it's not a bad thing. And this is what you're going to do the majority of the time as a trader. You're going to do analysis like this, and then you're going to end up deleting it once price action violates it. And you're going to start asking yourself, okay, what's next? So the question is, what is next? And I want to go out to my higher time frame, which is the daily chart, and I want to ask myself this question: where is the next level that price is likely to go to, right? So we had our higher high, higher close. We're in a bullish trend, right? We've put in a series. Draw this out for you guys. We've put in a series after basing off down here. We put in a series of higher lows. I don't know why this thing is sticking. Oh, maybe this has something to do with it. There we go. We put in a series of higher lows. and we've put in a series of, again, after basing off, a series of higher highs, which tells me that we are in a bullish trend. So, although on the lower time frame, some may see this as a bearish trend, and in its own right, depending on the time frame that you choose, it is a bearish trend. For me, I'm looking at this as simply an outside return, so simply a pullback. So nothing different than what we saw here, what we saw here, what we saw here. And each of these pullbacks, as you can see, is followed by an extension, right? The next leg up in the move. So bigger picture, I know that if we are going to continue this bullish trend, price action cannot break and close, or cannot violate, let's just say, this level of structure down here. So this is my low point. If price action violates this level, then I'm no longer looking for long opportunities. And this level is actually pretty important, because if I zoom out my chart and look at it, let's just look historically at what has happened at this level. We have seen price action, I'm looking for the right tool here. We have seen price action find support here, right? We've seen price action break support, find and create resistance here, right? You can see that we respected that level once again in here and in here. We then traded below it, and then we respected it again right in here. We broke above it, and then once again respected it here and here. So this line in the sand, this level has clearly been a level that the market has paid attention to before. Again, just looking historically how we flipped around from support, broken through, support turns to resistance, we kind of consolidated right after it, and then support, breakthrough, resistance, breakthrough, support, and then our last move right here was support as well. So would not surprise me if price action came back down into this level, and the level that I'd be paying attention to is really going to be right inside here, because this is where that reversal happened. Once again, going down to the 4-hour time frame, really just looking at where price action reversed last. When we come down here, we get kind of a clearer picture of the move, the consolidation, the attempt to go lower, the higher high, higher close, the first pullback, and then a change in trend from that level. So would not shock me if price action would continue lower. And if we do continue lower, then next week I will, or whenever it happens, I will be looking for longer term buying opportunities here to get involved on the potential next move up. Again, we still have that rate hike coming in November. At least that's what's supposed to be happening. So it would not surprise me again if we saw some continued bullish movement here on the pound, despite the bad economics this week and all the political mess that will probably blow over in a little bit. Now, with that being said, there is another opportunity, and there's an opportunity to hop on a bearish move in advance of a retest of this level. And we do this all the time in the live room where and this is why, in general, I don't really like using the words counter trend trader or trend continuation trader, because it really is relative to the situation. You could be a counter trend trader on the bigger trend, which is a trend trading on the lower trend. For example, we are currently moving bearish, right? So if I look for a bearish move, this is a trend continuation type of trade. However, this is only the retracement from a bigger bullish trend, so technically it's against the underlying trend. So I'm kind of getting to the point where I don't like using those words. I know it doesn't help you guys who are new, and I probably just confused you right now. So just forget I said any of that stuff. We'll worry about that another time. But what I'll be looking for here is a short position, right? Price action just made 3 legs down, right? And typically trends move in 3. So we have 1, 2, 3 legs down. A pretty sharp move down as well, and it wouldn't surprise me if we saw some relief. And what I mean by relief is if we saw a pullback. And if we are going to see a pullback, then where are we likely to see that pullback to? Well, that previous level that we had identified before, this is why I didn't erase it, that previous level that I once thought was going to be support that could hold, this could now be resistance that holds, and we could see a move back up to this level. The low line in the sand would be right here about 131, let's just call it 131.50s. The better option in my perspective would be around here about 132.26, really, because this is the level that I would want to have my risk reward above, or my stops above. I want to have my stops above these highs here. So the closer I can get to those highs, right, as you'll see, the closer I can get to those highs, the better the risk reward is for me. And of course, looking for extended targets a little bit lower. So two things I'll be looking for this week on the pound is either a selling opportunity if we get a retracement, or a buying opportunity if we continue down into this level. Now, the next pair I want to take a look at is the euro pound. And this is a really interesting pair here because we've been tracking this pair in the syndicate the entire week. And you can see we just moved to the level of structure that we thought we'd move to. And well, rather than explain it to you again, what I'm going to do is I'm going to show you some of the flashback videos from this week's syndicate program. Let me just bring that over, and then we'll come back and I'll explain to you what I'm looking for next. Syndicate members, Akil here, and welcome back to another syndicate video update. It is Wednesday afternoon, about 2 o'clock, and today we're going to look at the euro pound. This was a trade that was on my radar earlier in the day. We did have a speech by Mario Draghi today, or at least what I thought was a speech. I think it ended up just being an introduction for something. So I was waiting until after that was finished to see if that rocked the markets any. There was zero effect. We still do have a speech by our Fed chair, Janet Yellen, coming up at 3:15 a little bit later, as well as the Aussie retail sales that I told you about yesterday. So dollar pairs may be in for a ride after we saw the ISM numbers kind of give a boost to the market. So we'll have to keep track on the dollar pairs a little bit later. But I want to bring you an interesting situation here on euro pound. And it starts off by just looking at the most recent move. Now, the most recent move here on the euro pound, I'm on the daily, was a impulse leg, a swing low, a sore thumb swing low to swing high. So for you guys that have just started the transformation course, and congrats, by the way, we had a bunch of brand new signups for our Ultimate Trader Transformation course. Very excited to start this journey with you. If you've gotten to the point where you're looking at impulse legs and anchor legs, or just reading a price chart, this would be considered an impulse leg because it is a sore thumb move. And what I mean by that is it sticks out like a sore thumb, right? And it breaks our previous levels of structure. You can see structure looking left right here was broken and violated. Structure looking left right here was broken and violated. Structure looking left right here was broken and violated as well. And then after that move, what price action has done is it's come back to basically retrace half of the move. We can take our Fibonacci retracement tool and drag it from our swing low to our swing high. You can see that we've come right to that Fibonacci, that 50% Fibonacci retracement level. And that's going to come in right at a previous level of consolidation looking left, and a little previous level consolidation looking left as well. So a level that has been tested, a level that the market has kind of paused at in the past. And we've started to put in a little bit more consolidation. Right now, I see no bias as of whether this is more likely to break out to the upside or the downside. So what I would do is I would wait until price confirms a break in either direction and look to get involved in that way. And because there's no real relevant structure until Akil here. Welcome back to another syndicate video update. It is Thursday, October 5th, and we're going to take another look on the euro pound. Now, if you guys remember, this is a pair that we talked about in yesterday's syndicate video. If this is your first day in the syndicate program, welcome. Before you watch this video, you probably want to go back and watch the archived version of yesterday's video first. That way you kind of have an idea of the bigger picture of what we're looking at. But you can see that we're looking at a breakout one way or the other out of this consolidation, and you can see that we did get a break to the upside. Now, we don't technically have a break and close yet. We still have a few hours left in our trading day, but you can see price action is currently trading above the high of our previous consolidation highs. And the question is, Well, what do I do now? We know that we want to look, again, unless this candle drastically changes and gets sucked back into that range, we want to look bullish and not bearish. And if we're looking bullish, we're looking for a move higher. The first level that runs into my head, again, just as review, is a retest of this level right here of structure, right about 89.97. Let's call it 90 cent even. And then the second level of structure is going to come right at a retest of our previous highs. Now, if you are taking the approach, we also talked about 3 ways you can handle trading this. There can be the aggressive buy stop, there can be the buy at the bottom, or the breakout and retest. Let's say you're a trader that planned on using a buy stop. Well, obviously, if you're shooting for the lower level of profit target, that risk reward is not going to be in your favor. The higher level is going to be fine, but this lower level, the safer level, is not going to be in your favor. So the question is, how can I handle this trade? And what we want to do is we want to go down to our lower time frame. So I'm going to drop down to the hourly chart here. And if you notice on the hourly, we have a smaller flag pattern forming right at the top of our consolidation. So this green line right here, right? These are the highs of our previous level of consolidation. This is the level that we want to see broken and closed above. We saw that this morning. We saw a lot of pound weakness this morning, if you guys have been paying attention to the markets. But we saw a break and close above this level. Now we're starting to consolidate again. And we can essentially use the same premise that we did before. Consolidation leads to expansion. Contraction leads to expansion or whatnot. And look to play this the same way. So where our risk reward was previously like this, shooting for what's the word I'm looking for? Shooting for that conservative level, we can now take it like this. If you enter this flag formation right at market, right at the lows, and you're anticipating a breakout higher, we can roll our stops below our consolidation, something like this. And you can see that's going to give you a much better risk reward. In fact, it's going to give you, I can't see my little numbers here, but it looks to be about, if we were to just enter at market, let's see. This is what you do when you have this thing from a higher time. Let me see if I can bring this over real quick and just give you an idea of what this is. There we go. Look how big this thing is. Golly. Can you guys tell this isn't my normal charting platform? There we go. Move this in some. Let's say we're buying it right at market. We're looking at about a 6-to-1 risk reward. Yep, a 6-to-1 risk reward ratio here. And in my opinion, this is an aggressive trade that is a no-brainer take. Not necessarily for the fact that we know price is going to break out. I do think it's more likely to break to the upside than not. Yes, but we never know what the market's going to give us. But the fact that we've put ourselves in a probable position in the market, we've put ourselves on the right side of the market, and we have a risk reward that is just insane, out of this mind or out of this world. I think this is a perfectly takeable trade for you guys that trade this type of setup. So I'm going to get this video out to you as quick as possible. All right, so now that we've made our way to this level of consolidation, let me just delete some of this stuff for you. Now that we've made our way back to this level of consolidation, this is going to be my first decision point. I still think price can continue up to retest our previous structure highs, but I want to see how price reacts at this level. So very similar to the euro dollar trade that we talked about in last week's Forex market preview video, it's kind of a sit and wait type move. We got our move to target ones, which is great, got some money off the table. But for those of you that weren't involved in the move, you don't want to hop in late. You don't want to hop in right now because we are at that first danger point. You're not really putting yourself in a position where the risk reward is in your favor, but also you're not really putting yourself in a position where the market is as likely to move up than it is to move down and maybe retest this level once again. So what you want to be looking for at this level is you want to see how price action reacts. If we hold this level and start to retrace, we could have a bearish opportunity trading it back down to these lows right down here, essentially the original area of consolidation, the original area of that rectangle we had earlier on the video I just showed you. Or if price is able to violate this level, again, higher high, higher close above this previous level of structure, then we're much more likely to continue on our way up. And you can look for a trend continuation type of trade up to that level. So there you have it, guys. 2 trading opportunities here on here on the euro pound and on the pound dollar. I hope you guys enjoy your weekend, and I will see you next week with another episode of the Forex market preview video. You guys be safe out there. Take care. Speaking of entries, I just got an email from a trader. He had watched a YouTube video of mine, and let me see if I can bring it up real quick. Watch a YouTube video of mine. Said, Akil, thanks for the video. You're awesome. You're great. All the stuff that everyone says, right? He says, I do have a problem though. It was responding to a video where you talked about some traders have issues pulling the trigger, right? So the IPDE process is identify, predict, decide, execute. Some traders do a very good job of identifying, predicting, deciding, but when it comes to the execution, they get gun shy, right? They can't just seem to execute the trade. And this trader said, I feel like I kind of fit into that category. However, I'm not afraid of pulling the trigger. I just have some issues regarding it. And those issues are, I don't take trades, I do take trades, but I don't feel comfortable or satisfied in my execution, meaning I'm always battling and questioning myself. Should I enter at market? Should I enter after the candlestick? Should I enter on a limit order, right? The trader has no confidence. They're always second guessing their entries. And he said, do you see my problem? And the problem is simple. This trader, and I bring this up because I know many of you guys are new and many of you guys are either feeling the same way or at some point in your journey, you will feel the same way. The problem that this trader is going through is that this trader has no trading plan. You see, the trading plan, the reason that we talk about it so much is because the trading plan is really our business plan. It's really the backbone of our trading. Every question that can possibly be answered is in our trading plan. And if we have a fully developed trading plan, there's never a question. There's never a second guess about, did I enter or exit the right way? Because guess what? The right way is the way that is written in your trading plan. Now, you can always take notes, and when you review, I always advise that you go through and you look for alternative ways of taking targets, placing stops, entries. That's part of the evolution of trading, evolving as a trader. But as far as did you take it the right way, simple answer. If you followed your trading plan correctly, then you executed it the right way. And there should never be a situation like this where you're looking at this and you're saying, Akil, this is an awesome setup, but I don't know how to enter. Do I enter on the stop order? Do I enter on the retracement? How do I do it? Well, flip to that page in your trading plan. The answer should be right there for you. And if it's not there for you, then this isn't a setup that you should be trading, right? And that's why I always warn you guys, especially here in the syndicate, we trade a lot of different ways here. We show you guys a lot of different techniques that we do in the market, and we always advise you, don't just blindly follow us, because for the majority of you guys, again, for you guys that have come through our training courses, you have an idea what we're doing. You know exactly what we're doing. You know why we're doing. So it's a little bit different for you. You've been trained on this. But if you're new, you don't really know why we're doing what we're doing. And that could be a problem when you involve yourself in the same trade as we do, but you don't know how to manage it. You don't know how to roll stops. You don't know how to change entries. You don't know how to shift targets, any of that stuff. And you kind of get left out there in a very, very, very dangerous situation. So I thought it was a good example, the importance of a trading plan. It's everything that we need to know. If you don't have one, you need to start making one. And for you guys that have just signed up for the transformation course, don't worry. Here's the cool thing about the trading plan. I always say this. We trick you guys into making this trading plan, and here's what I mean. If we just go over here real quick, I'll show you what I mean. Good day in the market, by the way. 21 pips on euro yen for Greystone, 17 pips on dollar yen for myself. So almost a 40 pip day. Pretty nice for a slow day in the market. I'll take it. Now, if you go down to the Ultimate Trader Transformation course for you guys that just signed up, you're going to notice that your trading plan, trade plan development, is all the way at the bottom, right? Module 12, right? So you've got to go through 11 modules first. But I'll tell you what, if you're going through the course the right way, meaning, we give action items. I'm saying take notes, write down ideas, go through charts. What you're actually doing is as you go through each of the course content, you're actually developing your trading plan as you go through. because you're developing rules, you're developing ideas. And what happens is by the time you get to the trade plan development, you have all the information there. You just have to put it together. And of course, that's going to come as well when you decide how you want to trade, as far as your actual execution. So it's pretty cool. If you're doing it the right way, all of the hard work should be done before you get there, and all you have to do is put it together, and then you add stuff like money management and psychology and all that fun stuff. But let me get this thing out to you guys. So euro pound, that's the trade that's on my radar for today for you guys. Been trying to give you guys